Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Eric Jorn, a partner here. How you doing, Eric?
Wonderful, wonderful. How are you doing?
I'm doing fabulous. So we have a bit of a problem, and I'm pretty sure this is a universal one, which is people don't know the difference. And this includes me, right? Profit margin versus markup. What is the difference? Is it going to help out if we just kind of define each one first?
No, it's just the age-old question of markup versus margin. And geez, everybody gets so confused over these concepts, and these words all of a sudden get thrown together interchangeably like they're the same thing, but they're actually very drastically different things. And if you use one figure in place of another one, you'll actually end up with a huge problem. You could either be way overcharging or way undercharging for whatever you need to. So yeah, I think you're right. We can kick it off with just a high level view of what each of them represent. So we'll start with markup. I think most people think of markup just in general. We think about, I'm at the store and there is a widget for sale, and that widget's marked up by X amount of dollars. So say I might have a widget, it costs $50. I'm buying it from a wholesaler for $50. And I'm going to mark it up by $30. So my markup is $30. That's my markup. And you can take your $30 divided by your $50 cost, and there's your markup for that markup percentage for that. Now, where people get into trouble is margin, when you confuse what markup and margin are. So margin is actually what my gross profit percentage is on the sale of that item. So I'll take my $80 price, right? I have my $50 cost. I marked it up by $30. Now I have an $80 sales price. But my cost itself is $50. So I have my $80. I'm going to subtract that $50 of cost, leaves me with 30% gross profit, or $30 a gross profit.
Right. So in the example that we have, a markup is the actual $30, right? From your base $50. The $30 is how much the price is increased, while the profit margin is, what is it? The 30 divided by 80? What is that?
30 divided by 80 is 37.5%.
Okay. Why do those numbers really matter? Like, what is the difference?
Yeah.
The real difference.
Yeah. So gross profit's going to factor in the total sales price. So what is my cost versus my total sales price? Whereas markup is going to say, what is my cost versus my total sales price? Okay. So we're looking at this in two different ways. So we're taking our total sales price minus our cost. That's our markup. So that $30. Now the markup percentage is divided based on the cost of that item. So I marked my $50 item up by $30. And that's a 60% markup of the $50 to get to the $80 sales price. Whereas my profit margin is different. So that is going to be my gross profit. So my 80 minus my 50, that $30 markup. And that's going to be divided into the sales price itself. So that $80. So now we're using two much different bases to come up with that percentage. That's why we have that lower gross profit percentage.
So I guess the real question that everyone be asking is, what do these numbers matter?
Why do they matter? So I'll take automotive repair shops for a perfect example.
Sure.
Many shop owners used to operate under a principle: if I can get a 100% markup on parts, that I'm going to win. And I only factored up my markup, right? That's how I never analyzed gross profit or profit margin, or really margin itself. I just thought about markup only.
Just real simple, double everything.
Yeah.
Right?
So which is great, right? All of a sudden I think I'm going to get a 50% parts margin, which is okay in that industry. We can live with that. But what happens then is that's a rule of thumb markup. But then we come across, we got to do an engine job or a transmission job, or we got to use some dealer parts that and I can't do a 1x markup on it.
Why is that?
Just
it's
competition. Well, as parts that get more expensive, it's harder to mark them up higher, right? If I take a $2,500 reman engine, it's really hard for me to mark that up by $2,500. There's just going to be too much pressure in the marketplace, and somebody's going to actually go shop that significantly, right? That's impactful enough for somebody to go say, while I really appreciate you taking great care of me as a customer, impactful enough price that I'm going to go see if there's other options.
I mean, it goes from, seeing the base price, which anyone can look these up online, and saying like, oh, wow, that's not even viable for me.
Yeah.
Why would you pay that much more as opposed to something that's obviously far less expensive, double that? You're like, what do I care?
Exactly. And that's why for shops, we create something called a parts pricing matrix. You'll hear about that in other content that we've created, but essentially we're taking parts costs, we're applying a markup, which also then provides us that margin percentage that we get on each one. And we know that we need to get a much higher markup and margin percentage on lower price parts than we do on the greater price parts. And that's why everything is priced via a matrix, because we want to hit our margin percentage. And to do that, we need to mark up correctly. Now, if you don't do those equations properly, you're not going to end up with the result that you're looking for.
Well, and a lot of these, I'd say less expensive parts are your heavy sellers, right? They're selling more often. Let's say even like a brake pad, for example. That's a wear and tear kind of item, right? You're not replacing engines every week.
Yeah.
Maybe you are unless you're a big shop, but brake pads are pretty normal, right? So it would make sense that they would have a pretty reasonable markup. Right?
Exactly.
Okay. So I guess I would just say is, what's the number you should always be looking at more? What's the number that you really care about?
Yeah. So at the end of the day, well, you can't just look at one number. That's the thing about...
That's tricky then.
It is. Well, and that's the thing about businesses in general, right? So I'll reference the automotive space. Obviously, I have the knowledge in that industry, and everybody can get so hyper-focused on my gross profit margin percentage, and they get so hyper-focused on that. What they forget about things like, hey, I've outrun my overhead. That means I've covered all my fixed costs. And now every incremental dollar of gross profit that I generate now becomes net income to me, becomes profit, dollars in which I can reinvest back in the business. I can take money out for myself. So maybe if we get hyper fixated on one number, we might turn down a job that could bring us great gross profit dollars, but because we're only factoring profit margin, that we might turn down money that could go in the bottom line in our pockets. And we have guys that are standing around that could get that work done, and they can get paid. And
one more question that I have as we kind of wrap this up, because I'm curious about like cost to actually install, to operate, right? So where is that factored in any of these numbers? Like, hey, we're going to do this service, or we're going to utilize this product. Does the amount of time it takes for an employee to perform that service taken into account at this level?
Yeah. So it depends on your pricing structure and your how you bill people, right? So if I say I'm going to sell you a service and it's $1 amount, I would use my two cost factors, right? Which are going to be what's my cost for the materials and what's my cost for my labor. And then I'm going to mark up those and make sure that markup helps me hit that margin that I'm looking for. Whereas maybe I sell those two services as separate items, right? Here's my part. Here's what my cost is. Here's what I'm going to mark up. Here's what I'm going to mark it up. And here's going to be my gross profit on that part. And I've used gross profit and margin as interchangeably. Those are the same concepts. So those two words can be used interchangeably. And then my labor, same thing, right? My labor costs me X. I'm going to mark it up Y, and that creates a gross margin of Z.
Okay. Do you have is there a way that works a little bit better? So for example, just taking your labor and then just marking it up, or Is there another option where like you build it into the part?
Yeah, I'm a big proponent of having markup and margin on both of these, on both items, parts and labor, only because we are training our people, our skilled labor. We're ensuring that they are outfitted with the tools. We're providing them a living, right? So we should make a win off that.
Mhm.
And also I'm establishing relationships with parts vendors. I'm making sure that those parts are good and sound, and I can stand behind the manufacturing of those parts
too, right?
Exactly. And I should also make a margin on that. And that's where you might run into some pressure in the marketplace where you say, hey, I can go on Amazon and I can order that part for, what's my cost? And why would you guys charge a markup? Well, again, I can get the part here today, have it installed, and have your product fixed.
It's the service that
today
really you're paying for.
And then I'm standing behind it. If you order it from distributor Y off Amazon, there's no installer there that can make sure that it's installed right. And that was the actual repair that was needed. And that also that will stand behind that repair once it's completed.
Right. And then there's also that kind of warranty too, where you take it in and be like, oh, well, this wore out before it was supposed to, and get that replaced, and there's no cost to you.
Exactly.
Perfect. Eric, is there anything else you want to add to this?
Yeah, no, I think we covered everything. Again, two separate concepts that are used in conjunction with each other, right?
But not interchangeably.
Exactly.
So you gotta look at both is the key thing.
Exactly, right. So our markup is how much we're going to add to the price of what we paid for that part. And the margin is that markup that we get divided by the total sales price. So we're factoring two different things here, but they're two different and very important concepts that you should measure when you price out any part of your service or repair or product that you sell.
Perfect. Thank you very much, Eric.
My pleasure.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.